there's a lot of Bitcoin maxis that would say no, Web3 has yet to really show any use cases. Now, I would say it absolutely has shown at least the potential for use cases. Maybe it hasn't delivered on that. But there's a lot of people, especially in these the frenzies of these bull markets, that are trading meme coins, and they're doing that based on the technicals. Obviously, 0% on the fundamentals, except to the extent that they knew about it and there was some kind of insider knowledge, which I don't know that I would classify that as fundamentals.
Hi everyone. So today we have an esteemed guest. Can you introduce yourself?
Yeah, so I'm T Shrum, and I am on the Investing Bros. My partner is Tim, and we go live 9 a.m. Eastern Standard Time and 3 p.m. Eastern Standard Time, and 11 a.m. You guessed it, Eastern Standard Time on Saturdays. So hopefully, if you're listening to the sound of my voice, you'll join us for those live shows on Investing Bros on YouTube.
Going back to Bitcoin and its relation with the wider crypto market, we have seen like what seems to be lower highs in the for Bitcoin in terms of market share. So in terms of the crypto market share, obviously when it started out maybe in 2009, or maybe to be more accurate, maybe in 2011 when it actually became, it has its own market. Then at that point in time, it was obviously like almost the whole market. But right now, it's actually reducing in market share. So, like what at least seems to be like with each 4-year cycle, it's a bit lower out of the whole wider crypto market share. Do you think this will continue to happen in the future, or maybe as more of these projects get to zero and like maybe get wiped out, then maybe Bitcoin will regain some of this market share, like long term?
Yeah. So that one's a little more tough, right? There's a lot more going on there. It's a good question. That's I'm going to be honest with you. That's not one that I think about a ton. There's a lot of other folks who do think about that quite a bit. My partner Tim comes to mind. We're talking about Bitcoin dominance, essentially, which is very well quantified on the Bitcoin dominance charts. You can look up, I think it's Bitcoin.d on TradingView, and you can see that correlation that you've just referred to there, Hassan. But my understanding of it is going to be limited. So I'll just say ultimately, if you just think about it from a market's perspective, you would eventually start to, well, so it's this is does Web3 have real use cases, right? That, and there's a lot of Bitcoin maxis that would say no. Web3 has yet to really show any use cases. Now, I would say it absolutely has shown at least the potential for use cases. Maybe it hasn't delivered on that, but I would also say it has delivered on that, right? NFTs are something we didn't have before. Are they bringing a bunch of increased quality of life to people? That's debatable, right? But it is a technology. It is something for humans to do, to engage themselves with, to stimulate themselves with, that did not exist before, and it would not exist without crypto.
But
Now,
Max,
with
you would
with
reply that they have right now, they have a lot of maybe some alternative technology on the base layer, like I think they call ordinals or
ordinals, right?
ordinals. Yeah.
Yeah.
So yeah, how did you respond to that?
Absolutely. Well, let me just start by saying that NFTs are not the only use case at all for crypto. So, that would be I would be getting pigeonholed if I only focused on that counter argument from a maxi. But I mean, yeah, ordinals are great. They're a new innovation. I think that they're here to stay, but I think that both can exist. I don't know what the fee difference is between Bitcoin ordinals and, like, say, Solana or Cardano chain, but my guess is that it's going to be a lot cheaper to mint and then trade NFTs on Solana and Cardano. But I'm assuming that. I don't know that to be true. But yeah, that's absolutely what a maxi would say. Come buy and sell NFTs on our blockchain. Well, there's a lot more going on. I mean, in crypto, obviously. So.
Yeah, so you mentioned something important, which is the fees. Like
Mhm.
obviously Bitcoin is like almost like a direct correlation. The more the price goes up, which is like everyone is expecting it to continue like that, and it makes sense. Like maybe it can like almost the most definitely at some point in time, I'm not sure when, but maybe it will reach like $1 million or so.
Mhm.
So because the fees are correlated to the blockchain, and the Bitcoin doesn't seem to be willing to maybe increase the number of transactions enough. So, do you think that maybe obviously there is Lightning, but on the base layer, do you think it's like sustainable, or like maybe it's not like exactly from a utility perspective, but also more from a trading perspective? Like, is it sustainable to actually trade Bitcoin or even hold it? Because let's say, for example, you're holding a specific amount, at some point in time, you would have to spend a huge portion of your holdings just to transfer it.
Well, from a fee perspective, I think the fees on Bitcoin are pretty reasonable compared to Ethereum and yeah, really compared to Ethereum. From a trading perspective, I don't see why the fees would be a major obstacle to sustainability
I mean,
for
because a lot
traders.
of people would have it in cold storage and then they have to transfer it to exchanges and so on. Like a lot of, especially of Bitcoin maxis, they mostly like
Traders?
don't put a lot of, yeah, I mean, but they still trade, right? Like they are the ones who provide the main liquidity in the market, like when they offload
Mhm.
their cold storage, because yeah, otherwise the amount
Well,
available in the market is not that much.
I hear you, and that's a good point. For spot trading, like Bitcoin, I think that there could potentially be some issues with fees in the future. If it was traded at the same volume level as like Forex, right, is I guess what you're getting at, then maybe the fees would be so high that it would, potentially damage the network or something like this. I think the reality is that, the CME has provided a futures market to trade on top of Bitcoin, and, when you're trading leverage on Bitcoin, you're trading perpetuals a lot of times on these exchanges. So, and those are unlimited in my understanding. My understanding is that those perpetuals are unlimited in their scalability and they're not really prone to network fees, while you can still get, price action proportional to spot trading in whatever leverage that you're selecting.
Yeah.
So,
So,
the short answer is, well, perpetuals and futures is what traders could use.
So, do you think that in general, these markets do they pose like a risk onto crypto, this like expanding this bubble, or maybe it's not that much?
You're asking is does trading
Like for example, futures and all these derivatives, uh, are they like because a lot of people were pointing out, I think, especially in the last cycle, that this is the be all end all, that this will end crypto because of all this leverage inside crypto, and that it's multiple orders of magnitude higher than the trades that this derivative trades in the stock market or other assets
mm,
or commodities. So you think is it because I'm not honestly I'm not into this futures trading and all this derivatives, so maybe you have more knowledge of that. So is it like that high?
it's possible, I suppose. I mean, it would be news to me that the futures trading is higher on Bitcoin than on the stock market. I don't know that that's necessarily true. And when it comes to commodities market, I can't imagine that that would be true. Yeah, so I mean, and that would be my main argument, right? You kind of pulled that away from me at the beginning of that question, but I don't know that that's true. And my guess is if it isn't true, it's probably an anomaly to this moment where we're in, where there's heavy inflows from the ETFs. So my guess is and then my answer would be, well, it hasn't broken cattle head. Futures trading hasn't broken the cattle head market. It hasn't broken the soy or corn or, or futures trading on top of US equities markets. There have been some close calls in the pandemic era. You'll remember that oil traded at
The
$0 a
oil.
barrel for a moment, right? That's not good. But, in some way that was remedied. That might be useful to look into to answer the question, how did they fix that? But the reality is whenever you have a market, you have individual market participants that are selfishly motivated, right? They want to extract capital from the markets, and they do, or else they would leave. And so a system like the futures trading could only really break if there was just a rash of unselfishness in the market, if people became, for some reason, not self interested. So, and I don't anticipate that happening anytime soon, right? Now, there's other points of failure in the technicals, in the technology that underpins futures trading, but I would imagine that that is only going to increase, and that there is an infinite amount of incentive for futures trading technology to perpetuate into the future instead of descending into chaos.
So going to the markets and the charts.
This episode is sponsored by DegreeSign.
CoinExams platform was purpose-built by DegreeSign to be one of the best-performing platforms in the crypto space.
DegreeSign is an agency developing web products with a long experience of building products from scratch for maximum performance and stability.
Start today. Just email make@degreesign.com.
Would you say that, for example, how much influence would you put on your trades in general? Like, for example, for the project utility and fundamental analysis compared to technical analysis, how much percentage would you put on that?
For trading, well, the reality is that there's a lot of really intelligent people that are trading meme coins, right? So when it comes to me, first of all, I don't do a whole lot of trading. I mostly invest. When I'm trading, it's probably for social reasons. It's because I'm getting in with a bunch of people to kind of have fun, and I'm definitely not trading with more than, 0.2% of my overall portfolio. So, I may not be the best person to ask that question to, but as I survey the market as a whole, most people are trading Bitcoin, but there's a lot of people, especially in these the frenzies of these bull markets, that are trading meme coins, and they're doing that based on the technicals. Obviously, 0% on the fundamentals, except to the extent that they knew about it and there was some kind of insider knowledge, which I don't know that I would classify that as fundamentals.
So regarding investing, do you consider because a lot of people would say, oh, just is it good time to buy? So they always like keep analyzing the market for a good time to buy for some reason. So, but maybe it's also has like some benefit because obviously, let's say if you bought the dip, then obviously automatically your return is much better. So do you think that this is important, like when you are investing, or you don't look at that much and you focus on fundamentals?
So I am the type of investor who I mostly DCA, right? And I'm DCAing on an inconsistent basis. I'm DCAing based on swings, on highs and lows, and I'm trying to time those DCA allocations at the lows. So I'm just keeping track. Okay, this month I'm gonna be DCAing, $8,000 or $800 or whatever it is. I have that number in my head, and then when I see a nice low, I'm deploying. And when I see a nice high, I might take profit in something to go ahead and rotate into a different opportunity that
But
I think
initially
might
you
be more
decide, for
lucrative.
example, which good project like you planning to allocate to, and then you look for an opportunity in the market.
And I think what you're getting to, just based on the type of work that you do, fundamentals in the long term are the only thing that matters. So Warren Buffett has the quote in the short term, and this honestly could be a nice summary for everything we've talked about so far. In the short term, the market is a casino. In the long term, the market is a scale of value, right? And anything that isn't actually delivering value is going to be wiped away and go to zero, right? Anything that is delivering value, Google, Amazon, Tesla, Walmart, Home Depot, Apple, right? These are going to continue to go up in value because there's something solid there. There's something tangible. Bitcoin is something very, very solid. It's new, right? But if you look at it, people are very, very excited about it for good reason because it's something that the world has deserved for a long time. The people of the world has deserved for a long time. And then there's within the top 1,000, within the top 500 altcoins, there are absolutely, by market cap, there are absolutely projects, I believe, that will revolutionize the future in the same way that Google and Amazon, have. Maybe not in the exact same method, not the same value proposition, but maybe to the same scale. And so when I'm investing, I am doing quite a bit of research, but I'm also very aware that there are trends. And the psychology of investors is also very important to consider as well. Like in the case of Cardano, right? This is very frustrating for Cardano investors because Cardano doesn't do a whole lot to market itself, but most folks believe that Cardano is a very good investment from a fundamental standpoint because it's very well decentralized, it's fast and it's cheap and it's very methodical and its deadlines have been met and its roadmap has been very well thought out and sticked to from the beginning. Versus there's other coins that I won't mention that it's very questionable if they're even going to continue to operate, but they do such a good job marketing their value and their potential value that they get invested in. In the case of Solana, kind of the elephant in the room, I think Solana is unique in the crypto space because it kind of was hobbling along on one leg from a fundamental standpoint and just doing a really good job of marketing itself. But I think somewhere along the way, they started to make a very smart decision, which is, hey, let's take a lot of this money that we've got and let's actually make a good blockchain and make some improvement. And I think that that's probably the story for Solana. And the other thing too that we've learned, this isn't really answering your question very directly, but it's something that I think is a very big insight for investors, is that American venture capitalists and probably international venture capitalists as well, they are okay. At least those who have invested in software profitably in the past, they are okay with downtime. And so in crypto, it's unthinkable for Bitcoin to have downtime. It's never happened in the class, like, before the very, very beginning, phases of Bitcoin. In terms of what Bitcoin is today, Bitcoin downtime is kind of unthinkable. And then for Ethereum, kind of the same thing. But when it comes to Avalanche has had downtime recently, again, recording March 15th, 2024. And then also Solana has been kind of, the meme is that it's had downtime. The reality is that a lot of the people invested in these coins and in these blockchains are okay with that. They're not going to sell because of downtime. If that downtime is prolonged and it goes on for weeks, perhaps that could affect, not perhaps, that would affect the underlying project and its integrity and things like that. But that's something that we've learned in the first months here of 2024. That is a different breed of investors that have gotten into crypto, and they're okay with Web3 software basically having downtime.
So you mentioned, like, for example, Solana and also Ethereum. These are unlimited in supply. So do you think that the supply limited ability or like limited capability, like for example, Bitcoin will have 21 million only. Is this like something that in the future will have much more impact, or people will tend to ignore it? Because obviously, like maybe you heard about like the Luna crash, or maybe you are familiar with it. So like basically the supply hyperinflated, and then it went to almost zero, because especially with this less decentralized crypto, the protocol might change at any time. So obviously the supply can inflate. Like for example, in Solana, obviously it hasn't happened yet, and hopefully it never does for any good project. So do you consider this as a risk or not as much?
Well, it's absolutely a risk because it's happened. You mentioned Luna, right? It happened. A bunch of investors, went to sleep right, and they woke up wrong, right? And they woke up poor, or at least that portion of their investment was lost, and that sucks. Now, as more and more of those happen, which I think Luna was a very big project that went down, and so the market learns its lesson, and investors learn, okay, we need to watch out for that. That's got to be on our radar now. The fact that Ethereum does have infinite print, but it also is well decentralized. Not I think. It doesn't matter what I think. The market thinks that that's still valuable, even in a post-Luna world where that risk is now known, right? If it was a very significant risk, the market would have sold Ethereum, and Ethereum would be back down to 200 per coin, right? Something like this.
Would you say the same
That's
for
obviously not
Solana?
the case. Well, with Solana, it's less centralized. It's less decentralized, right? There is more risk for investors to wake up wrong, but you continue to roll the dice, and hopefully, is kind of sharing in your sentiment, is hopefully the market won't have to learn that lesson again. But it's an excellent question, and do I think that will be a bigger problem in the future? I hope not. I don't know. I don't feel that I have any unique insight into that specific question that would help push the needle for investors. But yeah, it is a problem. It is a problem. The question is how big of a problem is it? And clearly, it's not a big enough problem, even in a post-Luna world, for people to divest from these opportunities.
Perfect. So yeah, let's hope for a better future. And is there like any way for the people to get in touch with you other than the YouTube channel?
Nope, I'm off the grid. Just kidding. Yeah. So what you can do is you can reach out on Twitter at Shrum, TSHROOM, or on YouTube. You could potentially hit us up in the live chat or in the comments of one of our videos, and that's Investing Broz with a Z at the end of Broz. Yeah, those are going to be our main ways of contacting, and we do
Perfect.
have a
We'll add
business
in the
email that you can
description.
find in there as well.
Perfect. Thank you. Thank you so much for your time today, and hope you have a nice day. Bye.